All right, everyone, thanks for tuning in. Over the next few minutes, we're going to break down our financial results for the first quarter of fiscal year 2026. Okay, so the goal here is to really get the story behind the numbers. What went well, where did we face some challenges, and most importantly, what does it all mean for us? So let's dive right in. Okay, first up, let's take a look at the big picture, our overall group performance. So, starting with the top line, our total insurance revenue hit 1.26 trillion yen. That's some steady growth across the group, which is great to see. Now, when we get to the bottom line, our net profit landed at 118.5 billion yen. And, well, that is a bit lower than where we were in the first quarter of last year. And you can really see that change here in this bar chart, right? It really puts that year-over-year difference into perspective. So, the big question is, what's behind this? To get the answer, we've got to dig into our individual business segments. So let's do exactly that. We're going to break down how each of our core business areas played a part in these overall results. All right, let's kick things off with our foundation, the domestic property and casualty business, which, as you know, is led by the amazing team at SOMPO Japan. So this part of the business brought in a ton of revenue, 645.1 billion yen. But on the flip side, profitability was a bit of a challenge. Net profit came in at 32.5 billion yen. Yeah, you can see that profit here was down quite a bit compared to what was a really strong first quarter last year. But here's the thing, that headline number, it doesn't tell the whole story about how we actually performed operationally. Just to give you some context, our premium base is really nicely diversified. You can see automobile insurance is still our biggest slice of the pie, but we've got a great mix. And that diversity, which is thanks to all of our teams, is a huge strength for us. It really gives us stability. Okay, so to really get what's going on under the hood, we need to talk about a super important metric. It's called the combined ratio. The easiest way to think about it is like a health score for our core insurance operations. And check this out. This is the real story for this segment. Our combined ratio improved a lot. It dropped all the way to 94.5%. So what does that mean? It means our core business of actually underwriting insurance got way more profitable. This is a direct result of everyone's hard work on efficiency and discipline. And honestly, it's a massive operational win for the team.
Okay, now let's switch gears and talk about our overseas insurance business, because, wow, they absolutely delivered a standout performance this quarter.
I mean, look at this. This segment delivered incredibly strong profitability, 76.4 billion yen, on a huge revenue base of over 562 billion. Just fantastic numbers. And the growth from last year, it's just striking. Profit jumped by over 60%. This is a huge testament to the amazing strategy and incredible execution by our international teams. Honestly, this success was really the engine that powered the group this quarter. It just goes to show you the strength and, frankly, the importance of our global operations. All right, next up, let's check in on the performance of our domestic life insurance business, SOMPO Himawari Life. So this segment saw a bit of a rise in revenue, which is good, but it definitely faced a tough environment when it came to profitability. You can see net profit was 5.5 billion yen. And yeah, you can see from the chart, profit for this segment was down quite a bit from the same time last year. And really, this tough quarter for the life business was a key reason for that overall dip in the group's net profit that we talked about right at the start. Okay, so let's pull all of this together and summarize the key takeaways from our first quarter. So, it was definitely a mixed quarter. On one hand, we had an absolute star performance from our overseas business, plus that huge operational improvement in domestic P&C. But those strong points were balanced out by the profit declines in domestic life and that headline P&C number. What this does, though, is give us a really clear picture of our strengths and, just as importantly, where we need to focus. And this is super important. Despite the mixed bag in Q1, we are absolutely holding firm on our positive outlook for the full fiscal year. We're confident that the strengths we saw this quarter are exactly what will drive us toward our forecast of a 37.8% jump in net profit. So, what does this mean for us moving forward? Well, it gives us a really clear mission. We need to build on the incredible success of our overseas team and that fantastic core profitability in P&C while really digging in and tackling the challenges in domestic life. Let's make that our focus as we head into the next quarter. Thanks, everyone.